خلاص. الحمد لله هيك. الحمد لله.
Warm greetings and welcome to today's edition of the African Leadership Group, the Nigeria Leadership Series. My name is Itwa Igodalo, and I'm really happy to be here today. Please let me shut that door. I'm really happy to be here today to go through our conversations for this day. And I want to thank you all for joining us and for being on this platform. Today we're looking at how we can achieve the $1 trillion economy for Nigeria. And our guest is a very good friend and brother of mine. We've known each other for ages and ages. A great commentator on the Nigerian economy, a great advisor to many governments, both subnational and national governments, a great scion of a great family of Nigeria. He's a strategic-minded and accomplished chief executive officer with extensive experience in executive leadership, board governance, and non-executive director roles across diverse industries. He brings a proven track record. In providing strategic financial advisory services across real sectors, including banking, agriculture, and industry. Okay, he's popularly known for his father's great achievements. His father was the founder of stationery stores that became even better known for their football and their footballing skills in Nigeria, and one of the great leaders of that great sport in Nigeria that produced players like Peter Neke, Muiwa Oshode, Peter Fregene, and so on and so forth. Great soccer players of Nigeria of those days. And of course, Haruna Ilerika. I'm sure a lot of you who are on this program, apart from Owele and maybe Epe Udon, not know those great names of those days. There was also a goalkeeper called Inua Rigogo that played for a northern team. He was number one goalkeeper, and then Peter Fregene was number two. Eventually became number one. Then you had Peter Oshode, you had Peter Neke, who originally paid for ECN and places like that, and then paid for stationery stores. And then later on, a few years down the line, this great dribbler called Haruna Ilerika also joined the club. I remember their yellow and like maroon jerseys with a stripe across and so on and so forth. Very, very popular at what we used to call the Onikon Stadium in those days. Our guest is renowned for delivering insightful guidance to multinational corporations and government institutions, and he has demonstrated an exceptional ability in navigating complex regulatory environments and fostering strong stakeholder relationships. He also coordinated for the Ogun State government the last Ogun State, I think, sports fiesta in Ogun State, reputed and acclaimed to be one of the greatest in Nigerian history to date. So I'm happy to welcome to this program and to the platform today Mr. Tilewa Adebajo, the Chief Executive of the Advisory. Tilewa, my brother, most welcome indeed, and thank you for joining us. And I do understand that you have a slide that you want us to deliver, but before we do that, maybe you can just tell us what you think about the present state of the Nigerian economy at this time, where you think we're going, and a scorecard of what government has done so far, just as a broad introduction to the subject. And then I'd like you to tell us what $1 trillion economy looks like, and why you what looks like the benefits of having such size of an economy. And then I must thank you also. What I forgot. This is a man who has allowed his wife to be herself, to fulfill her potential, become and to herself have seeds of greatness. His wife was a commissioner in the Ogun State government under Ibikule Amusun, and stopped this short of becoming deputy governor of that state. So Tilewa, great to see you. Thank you so much for everything. God bless you. I hand over to you now.
Good evening, Pastor Itwa, and all the membership of the African Leadership Forum, and thank you very much for this introduction, your very kind introduction and your very kind words. I hope everybody can hear me clearly with the internet connection. I hope everything is fine there. And I hope that my slides are also very ready, because what I did with my slides also was to try to present to you, to start with, the current state of the Nigerian economy and give you an overview of that before we talked about this $1 trillion economy. Having said that, I think, so please, can you confirm if my slides are ready, please?
Your slides are ready, and they can start to project for you as soon
Okay,
as you
yes,
tell them
please.
to.
If they can start with the, let them get to the first slide. I think we'll start very well with that. So yes, okay. So I'd like you to go to the next slide, please, which talks about the next slide. This is the introduction. Can you put on the slideshow so that we can see everything? It's still not on the slideshow format. Yes, okay. Okay, yes, thank you. So this is the first stage. I can see a bar on top of the first slide. I don't know if that appears on everybody's
Why is
everybody's.
that bar there, Faye? There's one thick bar across it there. Can we remove that bar? It's covering some of the figures and the letters.
Yes, I just
Okay, very good. You've
Okay,
moved it
thank
to
you
the
very much.
bottom, it looks like.
Okay. Yeah, so thank you very much for that. And Thank you. So Nigeria, first of all, the first thing I'm going to say is that Nigeria is already a $3 trillion economy. We should have been a $1 trillion economy years back, and I'll show you the empirical evidence. The problem we've had in Nigeria is that we have not had the leadership to be able to put us in the right direction to realize the potential of this $3 trillion economy, not to even talk about a $1 trillion economy. So in looking at a lot of all these things, and when we try to see where we are today, we have some significant challenges today in the Nigerian economy. And one of the key challenges we have today in the Nigerian economy is that of the fiscal side of things. That is the government expenditure and government spending and government borrowing. We've had a continuation. We've had an APC government for the last 11 years now, and we've had a new president like 2 or 3 years ago that started a new series of reforms that have fundamentally changed the dynamics of the Nigerian economy. And this is a situation where we are faced now, whereby we have undergone about 2 years of some significant reforms, and we have reaped some significant benefits. However, having said so, these benefits we have reaped. The question now is that how do we deliver these benefits into what I would call growth? And when I say growth, we're talking about inclusive growth and tangible growth. That is growing our economy about 8 to 10% per annum so that we can lift 120 million Nigerians out of multidimensional poverty. Because right now, our economy has been decimated, the middle class no longer exists, and we have a situation whereby we have become a sachet economy. Everything is sold in sachets, and that is purchasing has been eroded as a result of inflation, and things are not where they're supposed to be. But having said that, like I've said, we've achieved significant results in the last 2 years. Reserves have gone up to 50 billion from a low of about 20 billion, and net reserves were actually down to less than 3 billion. That has recovered now to over 30 billion, which is a significant improvement. The foreign exchange regime has improved in terms of market availability. Inflation is coming down. I think we all agree that significantly from a high point. And we're in a situation whereby the economy, after having 2 years of a reform fatigue quagmire, I think now the economy is set for growth. And the economy has turned the corner, and it's really at a point of inflection. And what we're looking really at now is an area of growth. But having said that, I think it's important that we look at the global situation which invariably will impact the Nigerian situation. Right now, as we know, Donald Trump and his tariffs has distorted the whole world order. Post-COVID, we were recovering from global inflation. And last year, when Trump administration came in, we thought he will continue on some of the standard policies, but now came in with the tariffs, which caused a lot of disruption to the global order. The economy is in panic mode. And as you can see from my charts here, most of the foreign central bank reserves have now moved from US treasuries into gold. So a lot of the central banks across the world have moved their money out of dollar, and they've moved their dollar out into safety, and most of their money now is being held in gold. So the whole essence of the global economy now is that of uncertainty, and people have moved. There's a flight to safety, and that has been reflected in gold prices. Gold prices have reached a 90% high. From last year to this year, gold prices have almost increased by 90%. And right now, gold is trading over $5,000 an ounce, a record high. So that is a flight to safety that we're seeing. And this invariably will impact the Nigerian economy because we're an oil exporting dependent economy. And these are the challenges that we're facing today in Nigeria, in the sense that we need to grow our economy, and there are lots of there are lots of things that have happened in this environment, some historical, some present, but the most significant impact in Nigeria has been the devaluation of the exchange rates. Can I get to the next slide, please?
Just a moment, a bit of network issues here, but I'll connect back shortly.
Okay.
Send it to me as well so that I can have it as backup.
Okay. Yeah. Can I have your? Okay, I don't think I have your details, so I can
No,
send.
I was talking to Faye. Tilly, how are you? It's Jumoke.
Okay. How are you? How do you do? Okay.
Thank you.
All right. Okay. So the next slide talks about the Nigeria's macroeconomic 2026 forecast. And in looking at the Nigerian economy, the World Bank forecasts that the economy will grow at 4.4%, which is decent in the sense that it is at least slightly higher than our population growth. So for the first time in a long time, our GDP is growing higher than our population growth in the sense that at least we're making ends meet. But clearly, this is not sufficient. Well, as I said earlier, we're looking at growth of about 8 to 10% per annum to sustain an economy of over 200 million people. But having said that, I think we are projecting a growth of 5%. And the reason why we are projecting a growth of 5% is that we feel that there's some unreported potential in the Nigerian economy. Nigeria currently is number 5 globally on exports of rare earths minerals, which is not being recorded in our GDP. And for the first time in a long time, our containers are no longer leaving the ports empty. They're full of rare earth minerals, they're full of lithium, they're full of cocoa, they're full of raw materials. While this is a good sign, the third slide, please, slide 3. So while this is a good sign that things are rebounding, we can now see that we're forecasting that the GDP of Nigeria will increase this year from 285 billion to 300 billion. Our trade balances will improve to about 6 billion, and we had projected foreign reserves to be close to about 48 billion, and they are now at 50 billion. And the key challenge we have is the debt profile, which is currently at $100 billion. So we owe $100 billion now. That's as of June last year. So we're expecting that by the end of this year, our debt profile might be close to 125 billion because we have significant challenges on the fiscal side. So these are the projections we have for Nigeria. Unemployment at 4.5% is really not realistic of what is happening in Nigeria, the official numbers. Inflation should come down to about 10%, and we believe that the monetary policy rates, which are currently at 27%, should probably be reduced to somewhere under 20. Right now, the government is borrowing at between 19 to 22% on the markets, and the MPR is at 27%. So there's still a bit of a distortion between the MPR rates and the rates at which government is borrowing. So if we take a look at the adjustments of the MPR rates, that will impact the bank lending rates, which is currently over 30%. If you had to borrow in the bank now, it would be 30%, but the government is borrowing between 18 to 22%. So at the next monetary policy committee meeting, we expect that they will drop the MPR rates so that the corporates and the rest of the households can borrow at a much cheaper rate than the post 30% now. Can we move to the next slide, please? Next slide. So 2023 to 2025, we talk about Nigeria's GDP at 1 trillion. So the sectors that are driving the growth of the Nigerian economy today are mining at about 25%, but mining has about 3%. Financial services and insurance also growing at about 23%. Transportation is growing about 11%. Electricity at 15%. Water at about 9%. Art 6%. And then ICT, agriculture 5%. Oil and gas 4%. Oil and gas contributes less than 10% of the Nigerian GDP. The biggest improvement so far has been real estate, real estate is now the number 3 contributor to Nigeria's GDP. So we see manufacturing is also growing at about 1.5% and doesn't contribute that much to the economy. Trade is a big sector of our economy. So these are the key sectors of our economy that is driving our GDP growth. Next slide, please. So these are our projections for growth in 2026. Next slide, please. So what we're looking at in terms of the 2026 sector growth rate projection is that we believe the mining sector will lead the growth this year, as I've said, with 25%. Banks and insurance companies, 23%. Transportation will be next. Electricity, water, then arts and others, ICT, and agriculture. These are the key growth sectors of the Nigerian economy, and we believe that these are the key growth drivers of the Nigerian economy in terms of what sectors of the economy should we expect to be able to see this growth of the so-called 1 trillion. And we'll debunk the myth of the 1 trillion economy. Next slide, please. This is the debt profile for Nigeria. As I've said, as of June 2025, Nigeria's total external debt is $46.9 billion, and our total domestic debt is 80.5 trillion naira. So that's where our debt profile, a total of either $100 billion or 152 trillion naira. But basically, foreign debt is $46 billion and domestic debt is 80 trillion naira. And out of the 80 trillion naira, about 30 trillion of that is in ways and means financing, which was a lot of money that was printed under the Buhari administration, which has caused the problem that we're facing in Nigeria today. So this is June. So by the end of this last year, maybe this number would have reached close to 200 trillion naira, but we'll see when the DMO brings out its results. Next slide, please. Now, one of the biggest challenges we have in Nigeria is the high interest rate spreads. And the interest rate spread really is the amounts that the banks borrow and how much they lend. This is why banks are extremely profitable in Nigeria, or they have been over the years. The Nigerian banks are, you see, in green. And you can see that we have the highest interest rate spreads in the world. So Nigerian banks are very good at collecting your deposits and putting it into treasury bills or loans and making very, very high spreads. Now, this is really one of the areas of concern because with these high interest rate spreads, while the banks are making money, it's detrimental to the economy. And what you now find out is that this is one of the key limitations of the fact that we're not able to achieve a 1 trillion economy. While we have some structural issues that are impending our reaching 1 trillion, there is also a lot of policy issues with government. And as we continue to follow this policy of printing money and government not being able to control its debts and spending, this puts a negative impact on the economy. But on a more positive note, last year we had $25 billion in foreign portfolio investments. And this is what it costs to stabilize because we've restored confidence. As at 2023, you can see the level of foreign portfolio investments in this country dropped significantly to only $3 billion in 2023. But that has recovered, and by the end of 2025 last year, we have over $25 billion worth of foreign portfolio investments, mostly in OMO bills, money market instruments. And as you can see, the foreign portfolio investors have lost confidence in our stock markets compared to 2018 and 2017 when they invested heavily in our stock markets. And the reason for that is because our average traded volumes on our stock markets are very low, and our stock markets are not very liquid and subject to manipulation. So a lot of the foreigners are not there. Our stock market was probably one of the best in the world last year, But with all the returns of 40% you are seeing, if you did not sell those shares, you cannot realize the gains. That's what a little people don't realize. Most people just take their dividends, because if you sell your shares and you take out those gains, you're highly unlikely to be able to buy up those shares again, and probably will take you the next 1 year to build your portfolio back up. So there's positive and there's negatives, but this is a very good news, and this is what is keeping the Naira stable. Next slide, please, very quickly. Conscious of time. Dollar exchange rate, I think this has been a significant challenge. As you can see, our foreign exchange was stable from 2000, and something drastic happened in 2023-24, where the Naira from under 500 to 1,500, and now is currently trading at about 1,300. But you can see the impact of that devaluation between 2023 and 2025, which has significantly impacted our economy. Devaluation is not necessary in Nigeria. And what really kills and what is impacting our ability to reach the $1 trillion economy. This devaluation should not be at the level of 200-300% if it was properly managed. The Naira, in my own opinion, now should be trading at close to 800 to 1. But because of these distortions and the way the fuel subsidy was removed, then we're seeing the challenges. If we're saving $15 billion a year on fuel subsidies, in foreign exchange, we are no longer using it. We need to be able to see the impact of that 15 billion. We're not seeing it. But with this sort of massive devaluations, we can see the problem of what has happened. It shouldn't be at these levels, and that is what we're struggling to cope. However, from the next slide, you will see that, next slide, please. You will see from the next slide that we've made a lot of progress, because we now have a market-driven system which has stabilized the Naira. So in 2022, the premium between the black market or the parallel market and the official market was as high as 52%. So by today, that gap has been reduced to less than 5%, which is really the success we've had with the new foreign exchange mechanism. So hopefully, if we make the structural reforms that we need to do, then I don't see any reason why the Naira should not be trading below 1,000. Reserves at 50 billion, foreign portfolio investments at 25 billion, diaspora remittances are high as $30 billion a year. So oil price and oil production has improved significantly. So there's no reason why we shouldn't be doing better in terms of the value of the Naira, but I guess that's a question of time. Next slide, please, because I want to move to the heart of the presentation. So Nigeria has market opportunities. Our household consumption is about $30 billion a year. That's what our households are spending. But when there's a lot of inflation and you've reduced purchasing power and you no longer have a middle class, then you have a problem. So sachet economy, from alomo bitters to Gordon dry gin to milk to sugar to gari, everything has been sold in sachets. And what shocked me recently was that I went into one of the highbrow supermarkets in Ikoyi recently, and cornflakes, which is now manufactured in Nigeria, is being sold in sachets. So that tells you a lot. Cornflakes is not something that it's a middle-class meal. It's a middle-class cereal. It's an aspirational brand. And, it's been sold in cereals. I was pretty shocked. So that shows you how much purchasing power has been eroded and how much we've lost our middle class, and why we need to grow this economy importantly. Next slide, please. So talking about GDP growth rate projections, you can see Nigeria is projected to grow at 4.4%, but countries like Ethiopia, Cote d'Ivoire, Kenya, Ghana, Egypt, Morocco are growing faster than Nigeria. So this is, when you talk about our growth projections, you can see other African countries are doing better. Next slide, please. So what are the top growth sectors in Africa? If you look at fintech, tech, renewables, telecoms, healthcare, agriculture, transport, mining, and tourism. These are the key areas of growth in Africa, and this is really where we have the potential. And this is really where we need to look at to be able to develop our $1 trillion economy. Next slide, please. So Nigeria has dropped from the giant of Africa, being the top economy in Africa, to being the fourth economy in Africa. So the largest economy in Africa now is Africa at 400 billion, followed by Egypt, Algeria. Nigeria is fourth, and Morocco is fifth. So as a result of our devaluation and a lot of these challenges, this is what has happened to Nigeria. Next slide, please. Okay, so talk about this $1 trillion economy. I want to put this into perspective. So these are the top 50 economies by GDP in 2026. The largest economy in the world, we're talking about a $1 trillion economy. America is 31.8 trillion. China is 20.7 trillion. India is 4.5 trillion, bigger than the US. Japan is 4.5 trillion. So the top four economies in the world, India and China, are at par. You know, India and Japan are at par. And the Indian economy is larger than a lot of the European economies, including United Kingdom. Germany is at 5 trillion. United Kingdom is 4.2. France is 3. Italy is 2 trillion. So when you talk about one economies, you're looking at Turkey, Netherlands, Poland. You know, these are the countries that Brazil is at 2.3 trillion. Saudi Arabia is 1.3 trillion. Israel is at 666 billion. Nigeria here is giving about 300 billion, as we've talked about. So when you put all this in perspective, you can see that there's no reason why we cannot be a 2 trillion economy. And why has that not happened? Which brings me to my next slide and my last slide. So you can see that by comparison, when you talk about these top economies in the world, if you add up all the economies in Africa together, you see where it goes. So I'm going to try and make this point and end this presentation so I can take questions with this chart. People always ask me why Nigeria is not sorry, there's a black thing on the top. Can you help me unclick that? It says 2 people entered the room. So there's a black thing on the top. If you can help me unclick that, it's blocking
Is
the
it still on? Because I'm not seeing it on this end.
It says Zainab entered the room. Admits. So 2 people.
Oh, that's from Zoom. Sorry. Okay. Is it off now?
I've taken it off. I've been able to take it off from this end. Okay. So in terms of looking at when you talk about this 1 trillion GDP, okay, let us take a look at the example or the experience of Nigeria and Indonesia to explain this properly. For us looking at this chart, I want us to concentrate on that red line you see. That red line you see in the middle of that chart is the 1 trillion economy. Now, let us go back to the year 2000. On the bottom of the charts, you will see 2 line graphs, one in gray and one in blue. The one in blue, which is like the dotted line, is Nigeria. Now, in the year 2000, Nigeria and Indonesia had very similar GDPs, just under 200 billion. That was just 25 years ago. Both GDPs were just under 200, similar economies, over 200 million people. They were also had oil, just as Nigeria did. So they're very similar in size and in terms of the profile of the economy. So what happened? By the year, so after you take a look at the growth, you can see that by 2014, Nigeria had hit close to 600 billion in GDP. Then after that, something happened. At that point in time, the Indonesian economy was close to 800 billion in GDP. By 2017, Indonesia hit 1 trillion in GDP. At that point in time, Nigeria's GDP that was heading for 700 billion had tanked to 400 billion. Fast forward today, Nigeria's economy is at 285 billion. Indonesia's economy is at 1.4 trillion. So what happened is that in 25 years, we've only gained 85 billion in our GDP. Indonesia has gained 1.2 trillion to their GDP. We have lost a lot. So between that time, we've only added 85 billion. They have added 1.4 trillion. So what happened to Nigeria? So when we talk about 1 trillion economy, you can see that it's a mirage. We are far away from it. We're not even close to it. And even if we had to get to 1 trillion from today, our economy needs to be growing 5 times faster than 4% if we're going to hit 1 trillion by 2030. So it's not going to happen. So all these times you can see, and I can give you things that happened in Nigeria. Just in 2009, by the height of the global financial crisis, we had about $65 billion in reserves, and we had $25 billion in what you call excess crude accounts. 2 governors, Fashola and Amechi, went to court and said they must share that money. This was money that could have been put in the sovereign wealth fund, but they argued, they spent the money. So by 2013, 2014, by the time the Jonathan government was leaving, all hell had broke loose in the economy. We had $100 oil barrel at that point in time, but that wasn't enough. Those resources had been squandered. So instead of Nigeria moving from 700 billion in 2014 to 1 trillion, probably within the next 3 or 4 years, we're down to 285. So instead of gaining 300 billion, we lost 300 billion in our GDP because of the way we've mismanaged our economy. Now that they spent the money, we do not see the results. They've not made the investments. They've not opened up the economy. And again, the GDP tanked. Buhari had 2 recessions. One was self-induced, the other was COVID. Then he went ahead and printed 30 trillion in ways and means, and then increased the money supply and tanked the economy completely. So by the time this new administration came in, they were faced with a problem. They had to remove the fuel subsidy, a fuel subsidy which they could have removed at Jonathan's time. That fuel subsidy is saving us $15 billion a year. So if you take a look at $10 billion a year that we were wasting on subsidies, for the last 15, 20 years, you could see that that would have been close to about $200 billion that we just spent on importing fuel. Where is the result of that? Dangote built a refinery for $18 billion. So that meant that the money we wasted in the last 10 years on this fuel subsidy could have built at least 5 Dangote refineries or could have been invested in something. So this fuel subsidy is what has resulted in Nigeria not being able to hit a $1 trillion economy when it was supposed to do so. Going on that trajectory we're going, by 2019, 2020 at the latest, Nigeria should have been a $1 trillion economy. Now we're struggling at 285. So if we continue to put in policies that do not impact growth, right now, on last Monday, I was in the Senate and I made a presentation and we looked at the budget. And I said to them, last year, they said they've increased the tax. They said we have a new tax regime. Okay, fair enough. New tax regime, January 1st. FIRS, or the Nigerian Revenue Service, what are your revenue projections for this year? Now, FIRS says its tax receipts is projecting to increase by 45% this year alone on last year. So let us discount the economy growing at 5% from that. So that basically what we have been faced with last year is a 40, or let's even say conservative, they've increased their taxes by 35%. So now you are going with a 40% increase on tax returns, but then you have a 25 trillion budget deficit, which is equivalent to the size of your pension fund at 27 trillion. The total pension funds in Nigeria is 27 trillion, and our deficit for this year alone is 25 trillion, despite the fact that we have increased taxes by about 35%. We're still having revenue shortfall. So we have significant fiscal crisis. So I made it very clear to the chairman of the Appropriations Committee that the key problem of Nigeria now is that there's need for structural reforms at the fiscal level, because government needs to sell down some of its JV assets and raise about $30 to $40 billion to restructure its balance sheet, because the debt is no longer sustainable. Why are the banks making money? 15.9 trillion is what government is going to spend on debt service this year. Where is that money going? It's going to the banks, and it's going to be their profits for this year. So that is why the banking sector is growing at 22%, 25%, and agriculture is not. So all the 15.9 trillion they're going to spend, defense budget, health budget, education budget, power budget, infrastructure budget, the total of those budgets is 14.9 trillion, 15 trillion. So the debt service budget is more than the budgets of all those departments combined. And you say you want to be a $1 trillion economy. It's not possible. So we have some significant fiscal challenges that needs immediate structural reforms, and that is not going to work, because right now we're running 3 budgets. The capital budget the capital expenditure budget has not been funded for the last 2 years. And so luckily, I think the president has given the directive that by March, all the budgets will now be won. But clearly, we are not going to be able to fund our expenditure for our budget this year. And the capital markets cannot absorb that 25 trillion, because government is borrowing about 1 trillion a month. So that's that with that. So let me take the last point quickly to wrap up so that we can take questions. The last slide. So my last slide, please, talks about structural reforms required to reach a $1 trillion economy. So that when I finish, they cannot say that I did not offer my own solutions. Political will is number one. We need the political will to get these things done, and we need to start to pay budgets and cut our quota according to side. There's significant fiscal reforms that are required. The Fiscal Responsibility Act, which is the act that acts as a financial circuit breaker. The Fiscal Responsibility Commission. We have something called the Fiscal Responsibility Commission, but the government doesn't fund it, because this commission force all these fiscal rules. They need to empower the Fiscal Responsibility Commission to do that, and we need to enforce the Fiscal Responsibility Act, because this budget is in violation of the Fiscal Responsibility Act, and that needs to change. Ease of doing business, still a problem in Nigeria. Productivity and employment facilitation is still a problem. Productivity is key. Employment is key. We need to get people working. Therefore, we have like 3 sugar refineries in this country: Dangote, Bua, and flour mills at the ports. For the last 10 years, they've been importing raw sugar. Now, the question is that they pay a duty to the national, there's a sugar council that takes up a lot of duty from all these things, been collecting this money for 10 years. And what they're supposed to do with this money is to use it for backward integration, to get Nigerian farmers to grow sugarcane to supply these refineries. But we've not been able to do that. So why make all these investments and we can't do all these, we cannot grow sugar and refine it in Nigeria? Because the capacity of those 3 refineries can supply not only the sub-region in West Africa, but can also be part of our strategy for the African Continental Free Trade Area, just like the Dangote refinery. We need to start scaling up to that level to know that we're not only supplying Nigeria, but we are building things to supply the rest of Africa. With that, that's just one example of talking about productivity. It's very important. Again, our trade policies to ensure local manufacturing and value-added exports As I said earlier now, mining is the fastest growing sector in Nigeria. The containers are no longer leaving empty, but we're not recording it. And what we can see is that that is what is driving the insecurity in Nigeria. So we need to capture that. Trade with China is our largest, $25 billion worth of goods and services is our trade with China every year. Government needs to go and discuss bilaterals with China. All these companies exporting from China need to come here and start to manufacture here for the local markets. Those are the structural reforms you're looking at. Agriculture can no longer be at this level. Olam has a rice mill in Nasarawa State that is 10,000 hectares. That project costs $200 million. The irrigation alone costs $25 million. They have aircrafts in Makodi that they use to spray and do a lot of things. It's a high-tech place. We need at least another 5 of those type of farms in Nigeria to be able to ensure food security. We can no longer be doing smallholder farms. The farm in Nasarawa is a model that we can replicate. If you build 5 of those, it's going to cost $1 billion. It's not a lot of money. So those are the reforms we're talking about. Investment policies to facilitate local direct investment and foreign direct investments. Well, last year, we only had $500 million in foreign direct investments. Locally, people also need to invest, but luckily, we've had a lot of changes in the oil and gas industry, which is helping us. In 1977, Nigeria hit 2.5 million barrels of oil production a day. Since 1977, Nigeria has not been able to cross 2 million barrels a day. Our oil is declining. So, ladies and gentlemen, I thank you for your time. And these are my own solutions as to how we can reach 1 trillion. The bottom line is political will. Thank you.
Tilewa, you've done a fantastic job, and I'm really so grateful to you, and I am so enamored by your knowledge of the Nigerian economy and all the statistics that you have reeled out. And you can see by the volume of hands that are up, the amount of questions that people have for you. So I'm tempted to just yield the floor to the questions and answers, because most of you, what I would like to ask, I am sure somebody out there would ask it. And I'm going to also ask you, we're having an economic summit in Trinity House in sometime in March, 7th of March. If you are free on that day, maybe you can come and lend us your voice and comment on 1 or 2 areas of the economy. If you are free 7th of March, so let me take advantage of that, because we can't let you go away with all these statistics and information. You have to come and download it on us somehow or the other. But let me just ask one question as a lead question. You may then reply to it, and then Sonny or Jumoke will take over to run the question and answer session. And if we can also have your slides, I'm sure some people will be asking for it. We would be happy to send it through to people who want it. But you made a clear statement that it looks as if it's the fuel subsidy that has limited our ability to push our economy into $1 trillion. Okay, maybe you want to do a deeper dive into that and show the negative effects or the multiplier effects that prevented that. You said we spent about 285 billion or lost 200 and something billion on fuel subsidy and so on and so forth. That's number one. You said we need to do structural reform at the fiscal level. I don't know if you can speak a bit more to that. What are the structural reforms we need to do to ensure that as a government we can move this thing forward, and why the government is not doing these reforms? And I'm sure that you have spoken to 1 or 2 people in government before, either formally or informally. They should have heard from you. Why are they not doing this reform? I really don't know. Is it that they're not willing? Is it that there's nobody who wants to own it? Is it that they don't have the knowledge to do? So we need to do that. And then you gave me some statistics that was really frightening, especially with regards to our pension funds. You said pension fund is 27 trillion and we have a deficit of 25 trillion. It means that even if government borrowed all our pension funds to fund their deficit, we'll be almost again in a hole, and those pension funds will disappear if we're not careful. It means that there's something seriously wrong in this whole framework, and I'm surprised that somehow we're still managing to tick along. How come we're able to tick along and tick along and tick along? How come our economy hasn't even come to almost a halt? And why all this I don't know what to call it. Why all this kind of diversions and spending by government? Isn't there a chief economist, someone like yourself inside government, who is actually guiding and managing what government is doing? I don't know if I've asked too many questions, but for me, I'll be so grateful if you can give some light to that. Thank you very much. God bless you.
Okay, thank you, Pastor. Very quickly, when you talk about fiscal reforms, I think what we're saying is that government needs to quote its quote according to its size. If you cannot make the revenues, don't budget for it. And the laws that guide budgeting, like I said, the Fiscal Responsibility Act, the Fiscal Responsibility Commission, let's empower these agencies and let's do the right thing. We've had 2 years of reforms, and we have made significant gains from these reforms. But we need reforms by themselves are not going to grow the economy. We need to translate these reforms gains into growing the economy on a sustainable level. Yes, I've had the opportunity to engage a lot of the people in government. They've done a lot of work and they've done a lot of very good work. I keep telling them I'm not a government spokesperson. They have to find a way to telegraph their message to the populace as to what they're doing and how they're doing. But yes, there have been significant gains and they've taken us away from the brink. But now it's for them to articulate properly. My own as a commentator is just to highlight where I feel we have the problems, which is the fiscal side. Government spending or government revenues is not matching the expenditures. And the reason why I use that statistics for you, which I'm happy you caught on to, is the fact that you cannot have a deficit the size of the entire savings in the economy. That means that you have reached critical level. Also, you cannot spend 16 trillion on debt service and give all this money to banks when you're only spending 4 trillion on defense, which is really where you need to secure the people. So when you take defense, health, education, transport, power, and agriculture all combined together, and you are spending more on debt service than all these areas combined, then you know that there's a structural adjustment that needs to happen. So then the subsidy, yes, if you take a look at 10 billion for the last 20 years, that's $200 billion. So if you throw away $200 billion importing fuel, and we said we had 3 refineries in Nigeria, and Dangote built 1 refinery for 18 billion or 20 billion. So you know that we've wasted 180 billion. There's an opportunity cost that could have gone into significant investments, maybe into health or the social infrastructure. Health. Imagine if we had spent 180 billion on health and education, as opposed to using it for fuel importation. Nigeria will not be where it is today. So that is really what I try to do, is to use comparatives to be able to, because people don't understand the scale of things in Nigeria. And that's why I try to use comparatives to be able to bring my point home. So yes, there's some issues, and I think I've articulated all my views to not only the House of Assembly, the Senate Appropriations Committee. I've had a dialogue with the Central Bank last year, and I've also had a dialogue with the Ministry of Finance. And I think they're very much aware of this, and I think they all know what they're doing. But like I said, I'm not a government spokesperson. So they will have to be the people to articulate the good work they have done and to be able to give us the direction as to which way they're going. They will be more authoritative.
Thank you very much. Thank you very, very much. Sonny Jumoke, over to you with the Q&A.
Okay.
Let's try and
Good
have stop by
evening.
6:30, please.
Yes. Good evening, Tilly. How are you? Good
Good
to
evening.
see you. Okay, we have about 13 hands up, so we usually take like 3
Okay.
as a group, and we
Okay.
give them 1 minute to ask the question, and then you can respond to that group of questions if that's okay with you. I would also try to help jot any questions that you miss, and then I'll be able to share it with you if you need me to. So I'm going to take the first hand, which is Uma Sani. We've asked you to unmute. Please, let's keep it to 1 minute so that we can take others. Uma, please go ahead and unmute yourself and ask your question. Okay. So if Uma is not able to unmute, Usman Abubakar, we're going to ask you to unmute and please ask your question. Go ahead. Please speak up so that we can hear you.
Hello.
Yes, go ahead.
Okay, you can hear me now. Okay, I'm Usman Abubakar from Katsina. So I have much questions, but my first question is under growth and timeline. So the question is the projection based on real growth or currency changes? Then my second question is under classification. The question is how will dependence on oil be reduced? Then my third question is under jobs and poverty reduction.
Okay, can you hear the person?
I can't really hear you, Usman. You're muted. It's breaking. You can put your question in the chat so that we can read it out, but we can't hear you clearly. If you don't mind doing that, and then I'll read it out. Okay? So please go ahead and write it out. Okay, thank you so much for that. Charles, please go ahead and ask your question.
Okay. Well, thank you, sir. Thank you for your excellent analysis and recommendations. One of the things I saw missing, maybe you have it buried in there in the recommendations, you say political will. So I don't know if providing security for the country is included in that, because obviously that has to be there for some of the other things to materialize, because a lot of foreign investors don't want to come and invest because of the lack of security. And also, I don't know if you have thought about what happens with if we cut the salaries of these assembly people who are really not doing a whole lot of public service work. If you cut it by 50%, for example, I think there'll be a lot of savings there that can add to the economy. And also, with the disappearance of the middle class, how do you grow it with what we are doing right now? But a lot of what we are doing is servicing all the borrowing that we are doing. Thank you.
Thank you for keeping to time. Appreciate that. We'll take the next hand. Auntie Fumi, please go ahead, ma. We've asked you to unmute. Please go ahead, ma, with your question.
Yes. Mr. Adebajo, you've really made me very happy. It's a long time I've turned off Nigeria, because when many people speak, we speak superficially, but you have gone deep into some of the causes of our problems and how we got to where we are. But your recommendations, as good as they are very tough. And as you said, the political way, because structural reform, this is about the first time I'm hearing an economist talk about structural reform, institutional reform, and talking about sectoral reforms. It's a very, very tough job. But thank you for coming to this forum to educate us, because Nigeria needs this education. You've been very forthright. And one point you made again was that since 1977, we have not gone back to the oil per day of 2.5 million barrels a day. It's been teetering between 1.4 and 1.7, which is a big disgrace. It's a tough job. And political will, question mark. Thank you very much.
Okay. Thank you so much, Auntie, for keeping to time. The next person we have is Mrs. Bumi Lawrence. Please go ahead with your question.
Thank you. Okay. Thank you very much. Thank you. I have 2 questions. I think, as usual, I didn't expect anything less from Mr. Adebajo. He keeps querying me anytime I call him Mr. Adebajo, but that's what I'm going to call you. So I have 2 questions on debt service and sale of assets. You know, you talked about that. How do we bring debt service down? So I was wondering, do we have enough assets to sell that would significantly bring down the debt repayment? Because I actually feel that the option of debt forgiveness may not be available given our history and wastage. So would our lenders will not be open to debt forgiveness. So sale of assets was what you proposed, but how much can we really sell and what assets to actually bring down debt service, and to what level should we bring it down? That's the first part of my question. The second one is about fuel subsidy, and you said it's a waste. My concern around that was, sometimes I think about if fuel subsidy was into the Nigerian economy and those who got the subsidy invested it into Nigeria, why didn't the economy still grow? So is it corruption that they went abroad? So why did fuel subsidy really damage the economy as a waste? Thank you.
Thank you. Thank you very much. iPhone, can you please go ahead and rename yourself? We do not call out the name of devices. Just again, because we want to be careful, there are no hackers. Go ahead, Mr. Tilewa, and if you can take those 3, and then we'll take the next set of questions. We're not going to be able to take all 13 hands that are up at the moment. So please go ahead and take those 3.
Okay, I'll be very quick with the answers. In terms of security, yes, I think when I mentioned ease of doing business, I think it's hidden there in terms of those recommendations. In terms of cutting the salary of the assemblymen, well, I think that might help, but I think we need to do belt tightening across board. It's not really their salaries, it's their allowances and their extraordinary expenses. So we need to take a deep dive into looking at more of fiscal reforms and see how we can streamline that. And if you have a fiscal responsibility commission up and running, that's the sort of things that the fiscal responsibility commission will do. So it's important to do that. Growing the middle class, like I said, it's about growing the economy at 8 to 10% per annum. If we grow the economy at 8 to 10% per annum, we'll lift 120 million Nigerians out of poverty. I think that is pretty much set. There's no doubt about that. We've done it before. If you take a look at the data, 2012, 2013, Nigeria's economy was growing at about 8 to 10%, and inflation was about 11%. Under Sanusi, inflation came as low as 9%. So we saw the growth then. So that's not an issue. Debt servicing and asset sale. Yes, I think we need to optimize. If you take a look at accounting, when you have, according to MOFI, the total value of our assets are over 300 trillion naira, and our debt is just about 152 trillion. So, and out of that 152 trillion of debt, 40 trillion is ways and means, which is really where another thing, so it will be subsidy and it will be fuel subsidy and ways and means. Those are the 2 things that destroy the Nigerian economy. So in terms of answering the question of fuel subsidy, and yes, even so you said you have that subsidy, it becomes a waste because at the end of the day, it's not beneficial to the Nigerian system. And that money would have been, it's like opportunity cost. If we had spent that money to build a new refinery, then we would not be importing anymore. But you don't, a new refinery, as Dangote has seen, costs you 20 billion. So that is 2 years of fuel subsidy. So if you had saved 2 years of fuel subsidy, you'd have built a new refinery. So instead of 100 billion on fuel subsidy, or then you only spent 180 billion. So that is that lost. You have to quantify that. You can't run away from that. So debt servicing, the way we're looking at it now is the fact that if we are with the money we're spending on debt servicing, which you are seeing at the point in time, our debt to revenue service was close to 100%. But this, the Minister of Finance actually brought it down to about 34 last year. But with this budget again, it's creeping up again. So these are the things that they need to amplify and they need to take control of. So the best way is to raise money, and the best way to do is to sell down JV assets, not sell off. Please, let's get that right. I'm not into selling off everything. Let's sell down the JV assets and get $40 billion from that and use that, put some of that money in our sovereign wealth fund, put some of the money to pay down some of this debt so that our debt service becomes manageable and we have more headroom. I think it's just very simple accounting to be able to do that, because the money they are putting in for privatization for this budget is only about 200 billion. And 200 billion is less than 1% of the deficit. It's not going to do anything. So what I've told them at the Senate Appropriations Committee, that you are looking to raise from privatization proceeds is not going to get you anywhere. It's 1% of your deficit. So the clear, easiest way is to sell down those JV assets, and then we can get 40 billion from that. Thank you.
Okay, thank you very much. We're going to take the next set of questions. We have Mr. Boniface, we have Mr. Bubaka. We've asked you to unmute, sir. Please go ahead. 1 minute, and then
Okay, that's fine. Thank you very much. Chile, thank you very much. You know, I come from the same perspective with you, in the sense that Nigerian economy is much larger than 1 trillion. If you look at, you just talked about rare earths, minerals have been exported, they're not factored in. And then you look at our large informal sector. And in fact, you bring in the fact that the GDP dropped because the exchange rate was reduced. How did that impact on our productivity? And so I'm talking about realistically, the measurement, we changed the measurement and it dropped. So literally it didn't impact on what we are producing. So the economy is large. I think it's okay for us to have a target. I wouldn't want to worry so much about the target, because it gives us focus, it gives us some intentionality, so that we know what we're trying to do, we have focus. I think that for me, what is more critical in our economy is the fact that we're not doing what we should do. That's as we speak now. I don't have power supply. I've not had it for quite some time. And I live in a space in Lagos, supposed to be Band A, that's not so much on electricity. So you have all these issues. We don't have power supply. We don't have security. The data is produced by National Bureau of Statistics, there's trust deficit. People don't believe in it. I'm surprised you didn't mention Dangote in your presentation. I thought that if you have such capacity within our system.
May I interrupt you, sir? I'm so sorry. 30 seconds
right.
gone. If you can round up with the question, that would be great. So sorry.
Well, okay. The question is, I was going to say, it didn't bring in Dangote production. I think that really there's more of comments as I have. I think that we're not doing what we should do. The debt stock, the corruption, the governor drops $750 million to buy power supply from a governor. And anyway, okay, that's fine.
Thank you so much. All
Okay.
right. Can we have Abubakar, please go ahead? We still have a lot of hands up, so I'm really going to crave your indulgence, please. 1 minute.
Good evening. Thank you for having me. Do you hear me?
We can hear you. Please go ahead with your question.
Yes. Sir, this is a great presentation, I think, and you have said it all. But, talking about the structural reform and what have you. But I think the bottom line here is we need to have more of accountability, because if you look at the budget, half of it, when it has been enacted into law, half of the money is going down to the reforms and what have you. And these people have not been held accountable. Most of the money at the end of the year, it will just go down to their pockets again, and nobody will talk anything till after another 4 years, another president is there. So I think there is a need to be a more of accountability of what they are doing. That's the way forward. If there is no accountability, these people will still be stealing these monies after budget and run away with it. So thank you for
Thank you
having me.
so much. Thank you. So that's more of a comment. Auntie Yamisi, please go ahead with your question.
Good afternoon, Tilewa.
Good afternoon, ma.
Monsieur Ransom Kuti here. Always delighted to hear the voice of our enlightened generation that are certainly in charge of the country. We hold you responsible for what's going to happen in future. I loved your presentation and the fact that you're speaking up so forcefully. But my question is, you've talked a lot about national. Is there more that can be done at the subnational levels? And what can we all do individually? And particularly, what kind of structures would you like to see at the local government level that can stimulate production and feed into that $1 trillion economy you're talking about? Thank you.
Thank you.
Thank you so much, Auntie, for that. Really appreciate it. I'm going to take Mr. Afolabi next, and then Mr. Tilewa, if you could just take all those. I think a couple of them were comments. If you can take all those together. Go ahead, Afolabi. We've asked you to unmute. Mr. Afolabi, please go ahead and unmute.
Sorry.
Yes, we can hear you.
Can you hear me?
We can hear you.
Hi. Happy New Year.
Happy New Year.
Okay.
Good evening, sir.
Now, thanks, Rob. Now, my question to you is basically what we were talking about is new wealth, growth, okay, of new wealth. How is it possible to our bank lending rates are extremely high and astronomical, and it's very difficult to create business by going to the banks to borrow money. So basically all the businesses that you're doing, even with new infrastructures, new businesses, you're using your own personal money.
Yeah.
So how can we bring down the bank rates for loans and rent? That's my first question. And my second question is the amount of money that is spent on alternative power, i.e. diesel, is also extremely high. And there's now talk with, lately the national grid keeps collapsing. So there's now talk of the presidency thinking of changing it to solar. What are your thoughts on that as well? Thank you.
Thank you. If you could take all those and then maybe we'll take the next set. Thank you so much.
Thank you very much for the questions. I'll go through it. First of all, yes, on the formal sector, the formal sector is a significant part of the Nigerian economy. It contributes 50%. Right now, the Nigeria's GDP, let's say 300 billion. Informal sector contributes about $150 billion of that. So when Pastor Itua is talking about what keeps us going, Nigeria still generates $300 billion every year. So the output of this country for this year, we're going to generate $300 billion worth of output. So there's still money on the table. It's just a question of where that money is going. 50% of that money comes from the formal sector. And today, there's 6 trillion naira, 6 trillion naira in cash outside the banks that is supporting the informal sector, outside the banking system that is oiling the informal sector. So despite the fact that we've seen a lot of uptake in fintechs and all those things, cash is still king in Nigeria. And the central bank is grappling with 6 trillion outside the banks that is funding the informal sector. So it is a very powerful sector of the economy. We cannot discount it, and even in terms of taxation. So we need to get that very clearly. I mentioned Dangote in the sense that I talked about his refinery and the game changer and the fact that one refinery is 18 billion. If we built that, it could look at, and there's significant savings to be had. The gentleman who talked about accountability, I think, is quite agreed. And one of the things I mentioned to everybody I meet in government, I tell them that I'm not a spokesman for government, and I keep telling them they need to come and state their case. And the fact that there's still a trust deficit with the government and the people. Because when you talk about selling down assets, people say, they want to sell this thing, they're going to sell it to their friends, they're going to, and I says, look, it's not so. There's a process for this thing. It just cannot go to, I mean, what they want to sell is too much for somebody to pocket it. But government needs to do a lot of work in addressing the trust deficit and accountability. Growth, you talk about growth in terms of bank rates. Yes, definitely there is a problem with rates because of the inflation and the reforms we had, interest rates had to be high. But there are always two sides to the coins. The best time for the people who save money in Nigeria has been the last 2 years. People who have savings have been doing very well in Nigeria. A client that had 5 billion collected 1 billion in interest last year and did not need to do anything because he invested 5 billion naira and he collected 20% return. So people who are making investments, pension funds, have had a good year in Nigeria in the last 2 years. But again, on the other side, it's not good for business because nobody can borrow at 30% to grow the economy or to set up a factory. And I think that the government realizes this. So now that the economy has stabilized, what we now need, and inflation coming down to about 15, 14%, what we now need is to go back to the era of 2012, 2013, where we had the optimal level of inflation at 11% and the economy growing by 8 to 10%. At that point in time, interest rates were down to about 17%, 16, 18%, which created a lot of stimulus for growth and productivity. Yes, so that is coming. And that's why we are hoping that the next MPC rates should begin to come down because inflation is under control. You talk about alternative power. Yes, power is a big problem in Nigeria. And that's why I talked about it in my structural reforms. People like Dangote who are successful in Nigeria, Dangote generates about 3,000 megawatts of power. Dangote does not depend on the Nigerian grid. He has his independent power supply. At the refinery, he has close to 600 megawatts of power. So yes, if we have power, a lot of things will definitely change. And we have gas. So there's no reason why we cannot turn our natural gas resource to be able to generate electricity. That's another structural issue we have in Nigeria. Thank you.
There was another question on what can be done at the subnational
level. Yes, thank you. Yes, the subnational level is the point of intervention. The federal government of Nigeria does not own any land anywhere. So if you want to set up a factory in Nigeria, you have to go to a particular state or identify a particular areas. So you can see that the success of Lagos State or Ogun State in terms of industrial capacity is not an accident because maybe the leadership there have been friendly towards investments. But I think now a lot of other states are catching on. Look and see what the governor in Abia State is doing, Alex Oti. He's done significantly and he's got power sorted out in that axis. He's going to attract a lot of industrial development there. Other state governors are now beginning to realize this and they're following up. A lot of the northern governors are beginning to set up lithium factories to be able to take advantage of their rich mineral resource. And I think I was encouraged by the last National Economic Council meeting in Abuja, where all the governors were present. The central bank governor made a presentation. The Minister of Finance were all there. And I think the governors are now realizing that the intervention point is the states. The federal government is only about policy. And if you get your policies right, federal government funding will come towards your state. So definitely that's becoming good. Local governments, yes, we need to get to that local government level and empower local governments also because at the end of the day, they are closest to the populace.
Okay, so because of time, we're going to take the last 5 hands up. I'm sorry, Mr. Adekunle, we're not going to be able to take your question. We'll take Bethel, Amadi, and we'll take Pastor Olajide, and we'll take Joseph Olonshaw, we'll take Henry Kentebe, and Professor Nike Grange. So please go ahead, Bethel, with your question. We'll keep it to 1 minute. Thank you.
Yes.
Okay, can you hear me?
Yes, we can hear you.
Sir. All right, very good. Thank you so very much for the excellent way in which you had to walk us through the vision, prospects, and statistics for a $1 billion economy. However, having reeled out the numbers alongside the promises and the little gains of this administration, my question is put this way. How does this little gains reflect or touch in the everyday lives or living of the common man?
Thank you.
Thank you. Thank you for keeping it short. Would have Pastor Olajide Olagunju, please go ahead with your question, sir. We've asked you to unmute. Please go ahead and unmute.
Thank you. Thank you. It appears to me, sir, that we need to include Nigeria's macroeconomic policy history into our economic growth conversation. My own research shows that the specific macroeconomic policy change of nationalization, which took off in November 1969, is what has gradually brought us to where we are now. And that growth epitomized by the likes of stationery stores and thousands of others, which have all now shut down, were triggered by the pre-1969 denationalization macroeconomic policy ambience. So if we don't restore that old regime of denationalized economy, which guarantees bottom-up economic growth, then we'll keep playing the ostrich. Thank you, sir. And thank you, Jumoke.
Thank you so much. Really like all these short questions. We're going to have the next person we have now is Mr. Joseph Olonsho. Please go ahead with your question. We've asked you to unmute.
Yeah.
Okay, thank you very much for our guest, and thank you, Pastor. I have just two questions. My first question is, sir, I know tax is a fraction. You mentioned the new tax regime. Tax is a fraction of income of individual. So, what do you think? Do you think it would have not been better for the people in charge of the tax to focus more on how to make a lot of Nigeria to be gainfully employed, so that you not look for a way to get a fraction of that as a tax? Then, secondly, the second question is the $1 trillion economy. How will it benefit a lot of Nigeria who has been killed in their various towns and villages, and those who have died as a result of our poor health sector? Thank you very much.
Thank you very much. Do you want to just take all five? And just
Yes,
because of time. Okay.
I'm
So
writing
Henry
it.
Kentebe, please go ahead with your question. We've asked you to unmute 1 minute or less. Thank you. Go ahead, Henry.
Yeah, thank you everyone for this, and thank you, Mr. Adetilewa, for the brilliant presentation. I have just this bullet points. Subsidy is not bad. You subsidize production and not importation. Nigeria is the only major oil producing country not subsidizing energy. Tinubu has not done any magic. Dangote is the game changer. Nigeria can never be productive with 35% borrowing costs. And on the fiscal reform, I don't see any mention of the allocation, the 2 trillion that the government is pouring into the economy. And that's why the MPR is high. That's why the borrowing cost is high. That's why CBN cannot reduce the borrowing cost. So I need you to talk majorly about this financial recklessness by the federal government with the lazy pouring out of money every month called allocation. Thank you.
Thank you very much. We'll take the last hand up, which is Professor Grange. Please go ahead, Ma, 1 minute or less.
Thank you very much, Jumoke. Thank you, Mr. Adebajo, for your highly informative presentation. I come from the health sector, and we are seriously alarmed by the movement, something that's been done by the Senate to try and correct this problem of lack of balance, physical balance. In 2024, they released, appropriated 434.8 billion and released 65.5 billion. In 2025, 218 billion was appropriated, and they now have released 3.6 million, which represents 0.0165%. for capital expenditure in the health sector. Now, the question is this: why have they chosen to do this type of surgery on the medical sector? Is it because they think that the medical sector is not yielding profit? That's one question. And you know, it's definitely a distortion, and it's inequitable. You said that they
10
need
seconds,
political.
Ma. I'm
All
so
right,
sorry. 10
you said that
seconds.
they need political will. I believe that they need sincerity, political sincerity, and justice, to do justice. So what do we do? What should the health sector do with this gross injustice? Thank you very much.
Thank you very much. Over to you, sir, and let me know if you need me to read out any of the other comments. And if you can take it with your closing remarks, that would be great. Thank you.
Do you want to do that now so I can just respond at once to everything?
You want me to read the questions? And then Pastor Sonny also has a question for you, so I'll bring him up after this. So we talked about. Go ahead.
Okay, you want me to answer this very quickly then?
Yes,
Let me do
yes.
quickly. Okay, I'd like to answer Professor Grange's question. Ekro Lema, and thank you for your service to the nation, because I know you're committed. So the reality is that we have a shortfall in budgeting, which is not only impacting the health sector, it's impacting every sector. So the problem is when you see all these capital budgets, you think that you have money, and they pass budgets and you begin to expect this money. But the fact is that that money is not going to come, because this year you have a 25 trillion deficit. So you've budgeted with a 25 trillion deficit. For the last 2 years, the government has not been able to fund its capital budgets. So that means that they've been able to fund the recurrent budgets, but they can't fund the capital budgets. And the capital budgets are the most important budgets, because that's the capital spending that will go into the economy and cause development and will give multiplier effect, building new hospitals, adding more hospitals, building more labs, building more oncology centers, building more pediatric centers all across the country. So it's not just in the healthcare sector, it's everywhere. We've not funded our capital budgets in 2 years. So how do you expect to get $1 trillion economy? It's not possible. So that's why we're saying that the budget process has to change significantly. And that's why we're running 3 budgets. Because the budget of 2 years ago is still outstanding, because the capital budgets for those 2 years are still outstanding. So that's why we're saying that they need to cut their code according to size and let us understand and have a proper budget that we can fund. And that's why we're saying that you will now need to begin to get public sector, private sector partnerships. So that is really the challenge we have in the budgets that we're all feeling. And that's what we need to address. In terms of financial recklessness, I wouldn't call it that. These allocations are statutory and they're also constitutional, and that process is followed. So I think it is important that we all, hold our governors accountable also, because I think the accountability is only done at the federal level. You need to go and hold your governor in your state also to ensure that they're doing the right things. So that is very important. We've talked about this subsidy. You see, this subsidy is also, if we had the 200 million that we were able to spend on social infrastructure, which is healthcare and education. But we're spending it on subsidy. So these are the opportunity costs that has caused a lot of underinvestments in the social infrastructure in Nigeria over the last 5, 6, 7 years, over the last 10 years. So these are the challenges we have. How many new teaching hospitals have we built across the country, considering the way our population has been increasing? So how many new universities have we added on? And even the universities that exist, how are we servicing them? So we have this significant shortfall that the budget is looking at. They talked about the gain on the lives of people. In order for us to see the gains on the lives of people, like I repeat again, this government needs to be growing the economy at 8 to 10% on an annual basis. It is when you are seeing that level of economic growth and productivity that we will feel the impact on the lives of people. And if we can do that, we will lift 120 million out of multidimensional poverty and restore our middle class. I think that is a very, very important benchmark that we can't ignore. Talking about economic policy, national development plan. Yes, I agree with you. People like my father benefited from the industrial policies of old to develop their businesses and grow their businesses, including benefiting from loans from what you call NIDB, then the Nigerian Industrial Development Bank, which is now BOI. And if you take a look at the 70s, you had entrepreneurs like Adebajo who were doing a lot of industry. And in those days, most Nigerians went into industry, proper industry and manufacturing. But the structural adjustment program wiped out a lot of Nigerians. And right now, what is important now is that we need to create a new indigenous-driven national development plan in Nigeria that will benefit Nigerians. A lot of the Asian businesses, the Indians, the Lebanese, are doing very well in Nigeria, and also the Chinese, because they've brought in new capital and they're attacking the markets in a different way. But we do need a new national development plan to create a new set of entrepreneurs. Yes, we've created Nigerian billionaires, Otedolas, the Wale Tinubu, Mofe Boyo, Boa, Abdul Samad, and of course Dangote. Yeah, but we need to create more. And of course, the fintech sector is moving. So we need to create new wealth in new areas. So I think that's also very, very important. Basically, also, we talk about taxation. Yes, the jury is still out on the tax laws. Let us see what happens this year and see what the tax collections are. But from the numbers we see, there's still a few challenges, especially with the budgets. Then, of course, the benefits of the urban sector and social infrastructure, we cannot, that is really where we need to invest in Nigeria. If we can, all these savings we're making on subsidies, we need to reinvest it in the social infrastructure, the profit-driven infrastructure. Let government work on concessioning with the private sector, public sector, private partnerships, and we should concentrate mostly on social infrastructure, which will be health and education.
Thank you
I
so
hope
much.
I've covered all those questions.
Yes, you have. So before we let you go, Pastor Sonny has a question for you. So he would ask his question, and then you can also take that with your closing remark. So thank you. It's good to see you. It's been a long, long time. So thank you for being here. Pastor Sonny, please go ahead.
Thank you very much. Thank you very much, Lewa, for that very brilliant presentation. You said we've created, just on the side, we created a lot of billionaires, and you did mention a couple of them, but I think we've created much more political billionaires that you haven't mentioned. People that haven't built a single industry, but they are billionaires in Nigeria today, driving private jets all over the place. Maybe that accounts for part of the reason why we are where we are. However, my question is, the budget in Nigeria today, I was discussing with a friend, and he said to me, if we don't make a budget in Nigeria, Nigeria will not collapse. That he doesn't know the reason why we still waste time doing the ritual circles of budget. That when they need money, the money will come out from anywhere. When the president needed money to buy his jet, he got the money. When he needs money for anything, the money comes out. But yet, they are unable to fund things that they have put in the budget that they want to do. And then we have a budget office. What is their function in light of the various, insertions we see in budget, spurious things, buying computers every year, buying cars every year, puts, a project building hospital under Ministry of Fishery. So what is the function of, this various function? If you can speak to this briefly. Sorry, I know your time is up.
No, it's not a problem. I think I share your sentiments, and I think, you see, the expectation from government does not justify their contribution to Nigeria's economy. So let me be very clear with you on this. The reason why government is important is because government has a central role to play in regulation, in providing security, in providing rules, and in terms of enforcement of law and maintaining of the judiciary. But in reality, the government budgets, our GDP this year projected at $300 billion. What is government's contribution to it? It's less than 10 billion. At best, maybe 30 billion. That's all. That's the government expenditure. So it's the Nigerian people economy, so we are not dependent on government when it comes to a lot of our day-to-day things. Like I told you, 150 billion of that GDP is coming from the informal sector. How many companies is registered with the CAC in Nigeria? Do you know? It's not up to 1 million. They're not up to 800,000 companies registered in Nigeria with CAC. How many companies are listed on your stock exchange? Maybe 100, maybe, in a population of 200 million people. So when you take a look at government is 10% of that GDP. 150 billion of that GDP is generated by the informal sector, who are controlling 6 trillion naira. That is not even in the banks. It's not in, they don't have bank accounts. So you need, the informal sector is bigger than government. So, but government has an undue influence on the economy as to the way they spend, because they control money supply, they control the central bank, they control so many levers of the economy that if it's done properly, and they are supposed to create an enabling environment to grow the economy. That's you will fail with government. But because of their policies and their undue influence in the system, they create a lot of distortions. But in reality, government is only 10% of the $300 billion that we're going to generate in Nigeria this year. So, that's the reality. But policies that they make undermine the economy, because you want to export, you want to import, they'll put a tax here, they put a tariff here. So the ease of doing business or creating an enabling business for us is where the problem is. And this is why we're saying government really needs to relook at its strategy, at how it deals with Nigerians, to create an enabling environment so that we can thrive. I've answered that question.
Thank you so much. Before we bring up Mr. President to close, do you have any closing remarks, any parting words that you have for us?
Yes, I do, actually. First of all, I want to say that I have a fundamental faith in the Nigerian economy and the Nigerian people. And, our lives would be a lot more better if we're able to realize the potential of this $3 trillion economy. But unfortunately, because of leadership, we have not been able to realize this potential. We've been through 2 years of a reform fatigue quagmire, and we've suffered a lot to be able to benefit from these reforms. And I think it's important for us that the government understand that this year is a point of inflection, and they need to do the right things. They need to translate the gains of these reforms into tangible benefits for Nigerians. I think it's very important for them. And because without a doubt, we have talent in this country. And I think everybody can now realize with what's going on in the world, America is not as attractive to live in anymore. The UK is also not as attractive to live in anymore. Europe is not as attractive. So home is even looking a lot better. So it's important that we improve this country and let's realize our potential so that we can make this country comfortable for us to live in. Thank you.
Thank you very much for your time. Over to you, Mr. President.
Tilewa, thank you so much. God will bless you. God will look after you. God will strengthen you. And I like that your closing shot. It's important that we make this country attractive enough for all of us to live in, because home is where we should all go to. And you are right. In those days when we were much younger, everybody wanted to go to America. Part of the reason was to watch TV, go to the movies, go everywhere, listen to their music, Sugar Hill Band and everything. But today, America is listening to Nigerian music. and TV is available everywhere 24/7. So where are we going there for? So please let us talk to our leaders that they should really make home attractive for us and make home where we all want to be, and we can transform our nation like Dubai has done into something this. And already our young people are even helping us, because these days you have Dirty December and all sorts of funny things like that. People are coming to Nigeria regardless of how Nigeria is. So imagine if we were deliberate and intentional about making this place really attractive for them. Already the force of the young people has attracted them into Nigeria. So I want to thank you all very much and just lend my voice to that, and hope that somehow, somewhere, some people are listening to us, and hope that somehow we can really transform this nation. Thank you all very much for being here. Tile, thank you very much. Give my sister my love and my regards. Have a wonderful weekend, and the Lord be with all of us in Jesus' name. God bless you, my brother.
Thank you very much.
Very grateful to you.
Good night.
Thank you so much. All right. Good night, everyone. God bless you. Thank you for being on the program, and I'm sure Jumoke is going to invite you all to the after party. God bless you. Thank you.
Okay, thank you all. Shout out to all our youths on the platform. Good to see all of you here. I hope you continue to engage here. Faye, can you please stop the YouTube, please? And please go ahead and stop the YouTube. Okay. All right. Mr. President, you're the host. Do you mind disengaging the YouTube? Please go ahead and stop the YouTube. I think Faye is off.
Okay, we'll do our best to do that.
Okay. Thank you all for joining. See you next week, Thursday, same time, just as different topics, the same Zoom link. So please feel free to share that. And 5 p.m. we meet here every Thursday at 5 p.m. Nigerian time. Okay. All right. So we usually have what we call the after party, where it's more informal right after this, but we do not record that. So I'm waiting for the YouTube to be disengaged, and we go right into the after party.
Good morning. Oh, no, I was trying to leave the they finished.
Okay. Okay. Faye, please
Is it off now?
No, it's not. Faye is
No.
not hard like that now.
Okay. Oh. They're itching.
Jumoke.
Ma.